Welcome to another S&P 500 analysis. Today is November 14, 2020. This week, the S&P 500 made a new all-time high on the back of a positive vaccine news from Pfizer. And it appears the market has pivoted from a stay-at-home to back-to-work theme. We saw this theme being played out a little bit in the Nasdaq market. The Nasdaq failed to follow the S&P 500, making a new high. And many of those tech stocks that have benefited from the pandemic are starting to show signs of weakness or underperformance. Looking at this monthly chart of the S&P 500, the month of November so far has been a very positive month. The S&P 500 is up more than 315 points or 9.64% on a month-to-month basis. The weekly chart showed the S&P 500 finished the week near where it started. The S&P 500 printed an indecisive spinning top doji. Has a range of 134 points for the week and ended the week up 75 points or near 2%. And before we analyze the price action of the S&P 500 in more detail, let's see what the sentiment and the stock market internals are telling us. Looking at the VIX, there wasn't much change from the previous week. It is still hovering between the 20 and 30 zone and finished the week at 23.1. The put-call ratio also tells us the market participants are not getting overly bullish. It finished the week at 0.638. The New York Stock Exchange up-down volume ratio was +5 on the spike-up vaccine news Monday, and there were 1,909 more advancer than decliner. On Wednesday, it was kind of mixed as the S&P 500 closed up, but the up-down volume ratio was negative 1.6 with only 52 more advancers than decliners. Then on Friday, the advance led the decline by 2,115 with an up-down volume ratio of 3.7 as the S&P 500 closed with a new all-time closing high. The New York Stock Exchange new high, new low show a little bit of an expansion on Monday with 340 more new 52-week high than 52-week low. But for the remainder of the week, it was back below 100. And the S&P 500 closed with a new all-time closing high with only 56 more new highs and new low. That's not very impressive. The New York Stock Exchange cumulative AD line did make a new high along with the S&P 500 closing high. Looking at the Nasdaq market, we saw a huge reversal on Monday. The Nasdaq 100 closed down for the day, but was positive 1.7 up-down volume ratio and 1,170 more advancer than decliner. And on Friday, it closed up more than 110 points or 1%, and its up-down volume ratio was positive 2.2, and there were 1,689 more advancers than decliners. The Nasdaq new high, new low expanded to 376 on reversal Monday, then receded back to under 100 for the rest of the week. The Nasdaq cumulative AD line put in a higher high as the Nasdaq 100 was struggling to hold its ground. The overall picture from the sentiment is the market participants are not fearful nor are they complacent, and they are not overly greedy or extremely bullish. The market internal was showing us internal strength is holding up in the New York Stock Exchange and in the Nasdaq, but there could be some rotation activity going on, especially in the Nasdaq, as the market is pivoting from the stay-at-home to back-to-work theme. Let's take a look at the S&P 500. On this daily chart here, we see on Monday it spiked up at this level here at 3645 area. And then it faded throughout the day. And on Tuesday, it came down and filled the Monday's gap. And it looked like right now it's appeared to be forming some sort of channel. And there could be a flag as well that we could get a little bit of a retracement back down here. And what I did is, remember last week I put up this Fibonacci retracement on this swing here, and right now we are looking for this pullback to come into the zone and possibly get back into this 3389 and fill this gap before it pushes up to another all-time high and get up to this 3700 area and possibly get up to the 3800. Be ideal to come back into this retracement zone before it get it bounced and pushes up because right now, if it continue to move up here, then we most likely encounter some sort of resistance, or this upward move probably would not be sustainable, and we could see some sort of pullback to some sort of support, and it could be in this area here, this balance area, and if it come back in, then we could see it come back down toward the other end of this balance area. So on the upside, what I'm looking at is possibly get up to here to the all-time high, and it has to get back above this all-time high to push through to 3,700 area. And if it failed to do that, then we could see a potential retracement back down to this 3,200 level. Then on the downside would be come down and break this flag here and come into this this zone here, chop around and come down and fill this gap down at 33.89, then get a bounce off of this Fibonacci retracement and pushes back up, then work itself toward this 127 extension near the 37.56 and possibly move up to the 141 at 3,800. And that probably would be a little bit more sustainable bounce than if it were to continue to push up from here, then essentially have to break to a new high and create some area of support for it to continue to push up. So that is the SP 500. And let's take a quick look at the other indexes, the Nasdaq 100. You can see the Nasdaq 100 on Monday, it opened the gap up, but unable to hold at all and actually closed down for the day. And on Tuesday, it continued to move down, and it still leave this gap unfilled. Although it came back up and bumped up against this trend line here on this pennant that I have established from this this swing here. And you could call it a wedge or whatever you want to call it. Still, trend line is a trend line. And basically want to see what this thing be able to break above this 12,204 and move above it to get up to this high. See, this is not a good formation here. You got this hangman doji, and essentially this is a reversal pattern. And same here, this is not a good pattern as well. That's a top formation pattern. Likewise on this. So all these three top here, it did not have a good, clean, bullish type of candle pattern. As a matter of fact, they all printed a bearish candle pattern. So I wouldn't be surprised to see this pull back and try to fill this gap. And if it doesn't get a bounce off of this gap, then I'd be looking for this thing to try to test this trend line here. And if unable to hold this trend line, then I'd be watching for it to continue to move down to this lower end of this balance area here. Right, so we could be looking at 10,677. And looking at the Dow Jones Industrial, we see this sort of forming a bull flag, and it's still underneath this all-time closing high, 29,551. So next week, I'll be watching to see what it be able to get up above 29,551, and then push higher into this, possibly up at the 31,000 level. And on the downside, it's basically looking for this thing to come down to see would it be able to find support on this trend line here and bounces back. If it doesn't, then we'll be looking for this thing to come back down to the 27,000 area. The Dow Jones Transportation closed at an all-time closing high on Tuesday, but on Friday, it wasn't able to get above that. So right now, it seems to be consolidating here. We'll see would it be able to push up and get above this all-time high, its recent all-time high, and close above that. If it's not, then I'll be looking for this thing to retrace back and possibly test the 11,281. And here looking at the Russell 2000, the Russell 2000 got in a new closing high, all-time closing high, and all-time high got above the 1742.10. So you can see that right now it's kind of consolidating up here. Possible scenario is if it pushes above that, we will look for a retracement back to this 1742 for some sort of support, if it break out of this flag. But if it is unable to break out this flag, then we'd be watching for it to pull back into this retracement zone and possibly get a bounce off of the somewhere around that 50% area. And maybe it could even come back down and retest the 1610 right, at this retracement zone and pushes back up to get back above the all-time high and then get into the 1800 area and possibly get into 1850 which would be at this upper channel here. Okay, so that is the indexes. And as you can see, the S&P 500 is consolidating a little bit. It could be a little bit pullback. I would rather see a pullback back into this zone here before it push up. And that would be a little bit more sustainable upside move rather than have it just continue to move up to here and get into a new all-time high. Then we probably will see a big retracement back after that. So I would rather see a pullback into the retracement zone in the near term, then get another push into the new high territory before the end of the year. Don't forget to smash that thumbs up for me to help me promote this video on YouTube. It really helps out the channel. And thank you for watching and stay safe.